I hope everybody is doing good. A lot of things going on, a lot of deployments, a lot of new features, functionalities coming up on Rift. But before we discuss that, before we jump on to updates, I would like to first get into our training or Rift Before You Quit. If you all remember, today is the third episode of Rift Before You Quit. And today we are going to get deeper into the performance engine, how Rift works from inside, how it is associated with artificial intelligence, what it brings. And then Friday's session is also going to be very interesting. I'm going to brief you what we are going to discuss thoroughly on Friday. So today we are going to move beyond theory. In episode 1, we exposed why traders fail. In episode 2, we broke down the execution gaps, how Rift is different, and why traders fail because of execution gaps, and what Rift brings to the table when it comes to the comparison between different other models which are available in market, especially centralized exchanges, what they offer and what they don't offer. Basically, the execution is where the real edge is in the trading, and why retail traders they exit the whole trading game because of the execution, acumen, and capital uh, risk management. So, in episode 3 today, we go even deeper. So, and today's episode, we answer one question: what actually powers a system that trades better than humans? So, we will deeply understand as to fundamentally what Rift does. So, because automation is not magic, it is architecture. We established this fact yesterday uh, as we compared the centralized exchanges with Rift, as we compared the execution platforms which provide you all the tools, all the charts, all the indicators, but there is no such direction or there is no such instruction as to what to trade, how to manage risk, how to look into execution, especially the acumen to execute trades or the whole discipline, trading discipline, which is missing from these,
Recording in progress.
which is especially brought by Rift. So let's get into deeper understanding as to first we compare human versus system performance, then we will be able to understand how humans perform and how systems they perform. So humans fail due to inconsistency, but system we win due to repeatability. The only reason, the only fundamental core principle why auto trading engine always wins is because it does repeatability. Even if it books 30 cents of profit, 15 cents of profits, uh, profit means profit, and it keeps on doing that in the whole cycle. It never stops. It uh, generates profits due to repeatability, and that's where the whole performance of engine sets it apart. So if you all remember this chart, I've been showing this chart from last 3 sessions, and I think this is memorized by each and every one of you who is been regular to the Zooms. So this is performance over time of these retail traders, break-even traders, and structured execution systems in the market. Basically, retail traders they fail due to inconsistency because they overtrade, they get into that excitement loop and repeat. Then there are break-even traders which do not fail or which do not even make uh, break that even point and go above for the profits. Then there are structured execution systems which actually makes money and compounds, especially and we learned yesterday how what is the power of compounding and how profoundly compounding brings you to the different edge. If you compound 1% every day, it is 35% a month. If you compound 1% 90 days, it is 145%. That's where the actual power of compounding happens. And these structured funds, these professional traders, they work and they aim only at the capital preservation and compounding. And that's where the consistency comes, and that's why you get paid every single day for years and years. So, and if we look at this chart, we are looking at this chart third day with different perspectives. Today's perspective lets us summarize this chart as two studies show 70 to 90% retail traders they lose money, and average retail drawdown ranges between 20 to 60% annually. And the moment drawdown, we discussed about drawdown yesterday also, the moment drawdown reaches 50%, it takes 100% to cover and come at break even again. So that's where the bigger exits in terms of masses happen in the retail trading segment. Meanwhile, the systematic funds and quant strategies focus on consistency, risk control, and execution precision. The difference isn't intelligence; it's structured. So the whole intelligence is structured in the professional or structured, or you can say automated systems, and that's where the automated systems they prevail, they make profits, while manual systems or retail traders or traders which use different strategies and trade manually, they tend to fail. Now let's understand what automation layer actually, what it really means. Most people misunderstand automation. Automation is actually not random bots, blind execution, or guaranteed profits. Automation is never guaranteed profits, never blind execution, not random bots. Automation is structured decision making executed without emotion. And that process, when it's done repeatedly, that is the real automation. That's what we do at Rift Auto Trading Engine. The real market reference, if we understand automation, the high frequency firms that execute trades in microseconds. The retail traders, while at the same time take seconds to minutes to execute trades to close and open positions. So that delay actually gets the whole edge distracted. It's basically the speed of execution, the size of the edge, and impact of profitability occurs because of, it's a directly proportional phenomena which affects profitability, that is, speed of execution and size of the edge. So, manual trader which executes trades at 5 to 30 seconds delay, while semi-automated trading system executes 1 to 3 seconds delay. Fully automated system executes the same trade at 100 milliseconds delay. So, we all can understand which form of trading, which form of execution works at maximum efficiency, minimal slippage, and optimal execution. That is fully automated system, which tends to win more than 90%. While semi-automated systems with moderate efficiency, reduced slippage, and better timing than manual trader can or cannot win. Depends on their ticket size, depends on their age of execution, time of execution, market, everything. So now we can conclude after looking at the data that execution delay directly impacts profitability of a trade. So the market overall does not wait, and this is where the systems begin to dominate. Now let's come to the Rift Auto Trading Auto Engine architecture, how we have built Rift and what kind of systems they work inside Rift that keeps you always winning in the green. Now we go deep in our product. The system breakdown that we see, there's first that is a capital layer where you deposit funds. there is idle balance detection, and there is allocation to the engine. Then there is flow allocation system. There is a whole concept why there are three different flows, and all these flows have a reason. It's a core fundamental technology as to why Rift is based on these three, different flows, and these flows derive the diversity, the diversification of funds, the diversification of strategies, and there is more than risk to all these flows. So Friday, we are going to go in detail, in depth about flows. Each and every flow we will discuss, and we will understand what is the differentiator apart from risk in these flows. Well, you understand from outside after reading that it is a low risk, medium risk, and high risk strategy. But more than risk, there are different other fundamental factors that affect that uh, basically drive the flows differently. So flow allocation system is on which Rift works, and we have different flows. Alpha flow at high risk, high return, smart flow at medium risk, medium return, micro flow at lower exposure. This is essentially risk segmentation, but more than risk, there is a lot of factors that affect, and there are a lot of elements that strategize or that differentiate these flows in different strategical fragmentation of trades. There is more inside these flows which goes on when it comes to profitability, when it comes to the execution, when it comes to the selection of ticket size, when it comes to fragmentation of different trades. I will take different examples of trades also on Friday to show you all how differently this execution engine executes the trade. So apart from risk, there is capital allocation model in which these flows they work. So today we are not getting into too much depth about flows, but Friday is our dedicated training day for flows. So, and some questions also came from community about the understanding of the core differentiator factors between three different flows and understanding as to how these flows operate. Um, if you have all the three flows and you have a diversified portfolio inside Rift, inside Auto Trading Engine, your allocation model is a very uniform, is a very moderate, or you can say a very um, structured portfolio in which that is the reason why I've been recommending from day one to the users to get all the flows whitelisted per account. And that's where you will have a diversified portfolio inside Rift that will bring you towards a moderate profit generation and compounding mechanism in which all the strategies they work for you, and you always remain at the edge. So not too much depth into flows, but understanding the core understanding of these flows is the expected volatility, and then capital preservation because of the uh, risk reward ratio, or you can say the um, um, low risk taking appetite, and then there is smart flow at medium risk, then balanced growth and moderate volatility and sustainable performance. Then comes alpha flow with high growth potential, higher volatility, and uh, more active opportunity in terms of number of trades. So these strategies, these flows are derived with strategies also. And we are going to get into in detail, in-depth understanding as to how these three flows they differently work and what is their strategic role. So, so most traders fail because they don't allocate their capital properly. And if you at Rift allocate your capital properly into multiple flows, and all these flows they work for you in a very uh, unified way, then it is, I think, best synergy to allocate your funds, and that's where you win with the edge and you compound also with the edge. So Rift does it structurally. Now let's understand the full architecture of Rift as to how the whole um, user interface, capital management layer, strategy engine, execution engine, risk management layer, then analytics and reporting engine, it actually works. On these six layers, Rift is built, especially the from sign up to auto trading engine. This is the structure of Rift. These are the layers on which Rift is fundamentally designed in terms of tech. First is user interface, in which you have mobile app UI, you have the performance, cycles, you have deposit withdraw feature, reinvestment feature. Then there is capital management layer, in which you have the wallet, which is a self-custodial setup. Then there is idle balance detection of the auto trading engine, which lets you get into different strategy, which then there is allocation engine, which automatically allocates your capital to optimal strategies that you choose. Then there is strategy engine, which consists of three different strategies, three different flows: alpha flow, medium, smart flow, and micro flow. So strategy engine is what we are going to discuss in detail on Friday. Execution engine is where order routing, market data integration, trade execution happens. Uh, in the execution engine, you have the opportunity cards, you have manual trading. Now we have futures also coming. So in about 1 hour from now, we are going to whitelist. We are going to give the allowance to couple of professional traders to use futures trading on Rift and give us feedback so that we can start enabling the futures trading for the whole community from this weekend. Futures deployment is already done. It is fully finished. Now we are just waiting for couple of people to test, not to test, but to trade and check how seamlessly it works. Just like we did in auto trading engine, just like we did in manual trading. After the execution engine, then comes the risk management layer of Rift, in which there is risk management, whole lot of intelligence layer which manages your risk, which does position sizing. This risk management layer you are going to become when you trade in futures. So position sizing, stop loss logic, exposure control, selecting your stop loss, selecting your take profit, selecting your leverage, everything is going to be manually done in the futures by user. So this risk management layer works very smoothly in the profit opportunity cards, um, the swipes that you make in the Rift, in the manual trading, and it works in the automation layer as well. Then comes the sixth layer, which is analytics and reporting layer of Rift, which shows you track of your cycles, profit cycles, which shows you track of the whole community's profitability, charts, and everything on a daily, weekly, and monthly, all-time basis. So what you are seeing is not a feature, it's a system stack that we have built. Each layer solves specific failure point in trading, emotion removed, delay reduced, risk structured, and execution automated. And that's where we have really achieved edge in terms of shaping a product that pays you, that brings you profits every single day without fail. Then we do real trade flow analysis. As you can see, there are different uh, trades which happen in the auto trading engine flow, where there are different fragmentations of ticket sizes. Some trades are big, some trades are small, and later these positions can be with multiple users also. Let's say me, Lucky, and Rajiv ji, we are trading. Let's say there's a auto trading engine settlement that happened. and we all are trading with microflow, and three of us, we participated together, or our capitals were deployed in one trade. So at the time of profit distribution, equally we will receive profits directly in our um, settlement engine, and post settlement engine, once our cycle ends, we will receive it. We will receive the whole profit for the cycle we have deployed our funds into, according to our allocation in particular strategies. So there are multiple assets which are traded. We are not limited to crypto. Uh, we have a diversified exposure of trading in stocks, in forex, in commodities, along with crypto. And there is continuous buy and sell cycles, and there is micro position sizing, which is fragmentation, which I talked about yesterday. So this is not random. This is high frequency, structured execution, diversified exposure, and continuous cycle based returns. Uh, since humans trade selectively, systems trade continuously, and that's the whole reason why Rift wins above or over humans. Then there is yield engine, in which you receive yield. This yield engine is basically the analytics and reporting layer of uh, Rift, which reports or which delivers yield to you on the basis of your cycle in which you have deployed your funds in different strategies. And now it consolidates also your different cycles into one. And that is, I think, one of the best ways to manage capital, and also a good unique, because earlier we had these cycles being executed, at a different interval. Though there is no gas fee on Hyperliquid, we do not have to pay even as a platform to transfer funds to you, or we do not have to pay hefty gas fees. Imagine this working on Tron network. Imagine this working on Ethereum. We would have been wasting around 10 to 15% of our profits every single day in gas fee only. So this is how your daily yields are credited to you, and this shows your compounding behavior and cycle-based returns and reinforcement through reinvestment. The same concept which we talked about yesterday, the compounding effect, which when gets bigger if you compound consistently every single day. If you compound, let's say, a percent every single day for a whole month, the same example, it brings you 35% upside, and for 90 days it brings you 145%. So if we bring it together, then markets, they reward speed, structure, and discipline. And humans, they struggle with all the three. Systems are built for them, and Rift auto trading engine is not trying to replace traders. It's replacing the weakest parts of trading, that is emotion, delay, and inconsistency. The question is simple: will you continue trading manually, or will you operate with a system? And that's what we have delivered. So that is it for today. Now we will see each other on Friday with extensive, in-depth understanding as to how uh, your three different flows they operate. We have built engine of a Ferrari, and I don't think we no longer need to sit in Kia or Hyundai anymore. So it's going to be crazy from here. The moment we onboard 5,000 more people, we are going to go all in terms of onboarding people. And there is going to be no restriction, no, scalability challenge in terms of product. I repeat, Hyperliquid has billions, trillions of trading volume every single day. We can onboard millions of product users in this product, and this product is super scalable, where trillions of dollars of trading volume happens on this layer one solution with efficiency of 200,000 orders every second. This is a crazy, ecosystem that we have got into. And with this new feature coming, That is after futures, you guys are going to really get rich, especially the people who have referred a lot of people already. And that is the reason why I kept on saying, please make sure that you refer people correctly. You put them right into your structure. Even you have time now. If you think people are not in the right structure, give them some money, pay them $10-15 account opening fee, ask them to come into your structure, because after this, uh, after futures, what we are going to bring is something really really crazy. It's going to break everything. So after this feature, the product is going to become crazy unstoppable. By the way, I'm not talking about token yet. That is a different segment, different story. One more feature on top of auto trading engine we are going to give, and this is going to really blow the entire thing crazy. From today, I believe you all should take this very seriously and bring everybody in your organization, no matter they use it right now or they don't. Just bring them in. Just ask them to create one account and leave it. Don't buy license. Even if they don't want to buy license right now, they don't need to. Tell them, come sign up. We will do rest of the things later. Build the whole 5 level organization, super strong, super solid, because after futures, what we are going to drop is going to blow your minds, blow everybody's minds. So something really, really crazy is has been done already, and I'm going to drop it hopefully in 2 weeks from now. We are still testing it. I mean, not in terms of testing, but we are making money with it already. We are just gauging the consistency of generating profits, and I don't want to talk much about it, but it's something, it has blown my mind also. So I was not able to sleep for last couple of days because of this.